My name is Shawn Douglas, co-founder and CEO of Amberdata. Today I have the pleasure of moderating the panel. Are we in a Goldilocks moment in the current state of crypto and digital assets? I'm going to introduce myself, and then we'll go down the line and let everybody introduce themselves. Please say, your name, your background, what your company does, and how did you get into crypto and digital assets. So, Shawn Douglas, co-founder and CEO of Amberdata. We're the leading provider of institutional digital assets data. We serve some of the largest banks, market makers, quant funds, fund admins, and even regulators with the data they need to inform their decisions as they participate and build their businesses in digital asset space.
Hey, I'm Bill. Currently, I'm the chairman of the Cypher Capital, and apart from my main role, I'm also the managing director of the Phoenix Group, the largest Bitcoin miner in this region, and we will go IPO in Abu Dhabi Stock Exchange 2 weeks later as the first public company in crypto. And before I joined the partnership, I worked along in Binance as the global head of M&A for the whole Binance group. And before Binance, I was from very typical internet background. I managed the global tech investments for the largest e-commerce company in Asia, JD.com. Thank you.
Miriam, Kiwan, I'm the vice president for Circle Middle East and Africa. Circle is a financial technology company and a Web3 infrastructure company that basically helps move money at the speed of the internet. We're perhaps better known for being the issuer of USDC, which is the largest regulated stablecoin in the world and perhaps the most trusted. I started my career in digital assets. Basically, I started my career in general in technology, and I helped build the tech ecosystem in Abu Dhabi through ADGM. And through personal interests, I dived very, very deep into the space and had the opportunity to lead the digital asset space in Abu Dhabi for a period of time before joining Circle.
Good morning. Usman, Ahmad. I'm the co-founder and CEO of Zodia Markets. Zodia Markets is a digital asset brokerage and exchange platform that's been backed by Standard Chartered. So really bringing together the confluence of my two backgrounds, which are traditional finance, where I spent about 18 years across two major firms, Merrill Lynch and HSBC. And then more recently in 2018, I kind of dived into the crypto rabbit hole and have been struggling to come out ever since. So the last 5 years I've been in the digital asset and crypto ecosystem in a firm called OSL out of Hong Kong, which was the first regulated firm under the SFC's purview. And subsequent to that, I co-founded, with the backing of the bank and my previous firm, Zodia Markets, which is registered with the FCA, in principle approved in ADGM, and recently registered in the Central Bank of Ireland for pan-European access. Thank you.
Good morning. My name is Tania Reif. I'm the founder and CIO of Senda Digital Assets. We are a fund that manages directional, diversified, and risk-managed exposure to liquid tokens and the crypto space. The idea is to offer optimized Sharpe ratio for anybody that wants exposure to the asset class. My background, I grew up in Venezuela, and after many, many currency crises, I was fascinated by the field. I did a PhD in economics at Columbia University. I worked at the International Monetary Fund for about 4 years, and then moved to the private sector, going first through Citigroup and really spending a good 13, 14 years of my life trading currencies and interest rates and macro hedge funds such as Soros and Citadel and Alpha-Line. I founded Senda about 2 years ago, and I am now really enthusiastic about the prospects and future of this asset class.
Salam alaikum, Habibis! I scared everyone. There's 2 Habibis here. My name is Fazel. I'm the Chief Partnership Officer at SwissBorg. We're a crypto wealth management app that automates your journey to financial freedom. We have 1.1 million users, one of the fastest growing apps in Europe. I'm super happy to be with you today. I was on this stage on November 21st last year, and I boldly said to everyone attending that it would be irresponsible to not have 1% of your portfolio on Bitcoin. That was 1 day before its annual bottom, and we're 2.1 times up since then. So I hope you guys enjoyed that.
All right, so let's talk a little bit about the global macro environment. Alex, you want to kick it off, and then I think I'm super interested to hear what Tania says.
Yeah, absolutely. So I would love to take this from the investment and the technological perspective, specifically in DeFi. So before we start, I'd love to do a quick tally to understand who I'm talking to. Who here owns either bonds or high yield accounts in their portfolio? Corporate bonds, government bonds, AAA. Okay, quite a crowd. Who here is using proof of stake with your crypto assets? Okay, there's quite a few people. Now, I would like to share that this is probably one of the most interesting opportunities I found in the current market, and there are lots of similarities, but also differentiators between the two. So first of all, proof of stake, as you may know, everyone, is the most conservative approach to earning yield on your assets, which is similar with bonds markets. But timing is key. Timing is key. Because right now in the current cycle, if you think about the bonds market, yes, you have a conservative approach, but if you're losing 3.5 to 7% on inflation, how much are you actually saving at the end of the day? While with proof of stake right now, obviously it is more volatile, so it involves more risk. But the timing of the market, when you see all of these blockchain layers down 65 to all the way 90% from their previous all-time highs, there's something to do here. And I find that proof of stake is very much misunderstood because it's revolutionary. It's something that does not exist in traditional finance because it's essentially you all, instead of lending and borrowing, taking your assets and staking them to secure a network. And that is pretty much you becoming like some sort of bouncer in front of a club or a security guard at some sort of border. And I think that that's a very cool concept in itself. And recently, there is huge innovation in DeFi. Who here has heard of a project called EigenLayer and the Restaking Collective? Oh, there are a few people. Wow, okay, there's a cool crypto crew this time. Well, EigenLayer is building something, and as much as we talk about RWA, real-world assets, as the new big thing, I wouldn't agree on that simply because real-world assets already exist in traditional finance. Yes, maybe it's a plus one from what we're doing in traditional finance, but I really think that DeFi needs to build something new, solve a new problem to really attract people to think, okay, now I have a reason to come and to do things on chain. And the Restaking Collective, if we think about proof of stake, it's like having your assets and being able to restake them, adding composability so that you can earn and leverage your debt instrument and earn higher yields. So for instance, if you're earning 4 to 5% on Ethereum or Polygon or whatever chain you believe in, now you can leverage it and use it as a collateral in multiple assets and multiple protocols so that you can go from 4 to 5% to 8 to 9, even up to 10%. And that is something, this composability does not exist in traditional finance. And that's what I'm the most excited when it comes to technological advancements.
Awesome. Thank you very much, Alex. Staking and generating yield, it's one of the differentiating things about some of the layer twos and crypto, and EigenLayer is super interesting. I agree. Tania, can you talk about the global macro environment?
Sure. So let me take a step back and tell you why I think we really are in a very good moment for crypto, the Goldilocks moment for crypto. I think there's 3 things to think about. The first is what's been holding back crypto has been the regulatory environment, especially in the US. And that is changing. We have seen at least 4 regulations, 4 rulings from the judicial system in the US that have been pro-crypto. That has been, we talked in the previous panel, the Ripple case, we've seen the Grayscale case, we've seen the Uniswap case, and we've seen the fair accounting on the corporate side. So even though you may not know the details of all this, these are all positive regulatory changes. And now there is a very, very high probability that we're going to get a Bitcoin ETF approved before January 10 of next year. If that's the case, that's really going to be a massive change. It's going to bring legitimacy to the industry that was lost last year after the FTX collapse. And that's going to bring a lot of institutional demand, a lot of demand from all of the actors that use RIAs for their investments, and it's going to facilitate the flow of capital into crypto. That's one. The second one is liquidity. And we have seen in previous panels yesterday on the macro environment that yes, the cost of financing is higher because interest rates are higher, but that doesn't necessarily mean that liquidity is tighter. Liquidity is measured not only by money supply, not only by high interest rates, but the availability of liquidity in the financial system. And there's many measures for that. In the US, for example, I'm sure plenty of you that follow macro, look at the TGA, look at the reverse repo. When you look at global liquidity, it's actually not contracting any longer. And in fact, it's easing. In certain countries like China, for example, it's easing quite aggressively. This is positive for crypto. And then finally, the geopolitical events. This may be counterintuitive, but remember that in many countries, such as mine, such as Venezuela, when you have tensions, geopolitical tensions, flight to Bitcoin, sometimes it's flight to safety. Why is that? Because access to a US dollar bank account is not readily available for many people. Sometimes you may be concerned that having your savings in US dollars may not be the safest for geopolitical concerns. And then, finally, it is the concern that the war efforts may actually increase fiscal spending and increase monetizing this fiscal spending that may also give another tailwind for the crypto asset class, especially, of course, for Bitcoin, but in general, for the crypto stablecoins and the like. So I think for those three reasons, we are in a very good moment for crypto from here, from a macro perspective. And if you don't believe anything I said, you can think at least of two things. We have increased demand, potentially from the approval of the ETF alone, and we have decreased supply because of the halving that we have next year. So just if you stay with those two things, that's still a positive backdrop. And of course, after what we had last year, the positioning is a lot cleaner. So I think we have a good starting point here.
That sounds like just right. So, Usman, I'd like to hand it to you. You've got a pretty strong background in markets and, from a global macro environment and other major trends, hot, cold, just right. Where do you see, where are we at and where are we going?
So if we were having this panel, I'd say a month, 6 weeks ago, it would perhaps have been a slightly different theme. We've just hit recent highs on Bitcoin prices for this year, as Alex quite rightly pointed out from a year ago, over 2 times increase in Bitcoin pricing. The other points, and I can't really elaborate on anything Tania said, she's far better at that than I am, but I will touch on a couple of different areas that we're seeing that maybe talk to the broader digital asset ecosystem outside of just Bitcoin. And Alex did touch upon the staking opportunity of driving yield, which I think has been an interesting area that has perhaps been missed by a few people. The DeFi opportunities are significant, but more broadly than that, the problems that exist in the world right now that Tania did touch upon with respect to some of the geopolitical crises highlight the fact that money supply is challenged and the movement of money remains an issue. Now, I'm perhaps lining Miriam up in a moment to talk a little bit more about stablecoins, but a big area of potential upside is that movement of money and the interplay between the digital assets more broadly. So Bitcoin, Ethereum, and other crypto assets as a trading asset, store of value, and mechanism for movement. But stablecoins are an area that we've also seen a significant uptick in. Stablecoins at the moment, 99.4% dollar dominated. So USDC, Tether are the big major players in the stablecoin space. But what we're seeing is a lot more interest from multinational corporates, from firms that are looking to move money around the world much more efficiently and effectively, leveraging stablecoins as a proxy to the challenges that we have and continue to have in the banking ecosystem. So if we think about tailwinds for digital assets more broadly outside of just Bitcoin, we're seeing a growing and more challenged view around how do we move money and move capital much more efficiently than we do right now. And one of the things that I've been contemplating for a period was actually rising interest rates being a challenge to the use of stablecoins, right? Because stablecoins typically do not provide you an interest-bearing outcome. There's yield that can be generated through other mechanisms. But actually what we've found with a lot of the clients that we're talking to is the cost of capital, and the previous panel touched upon it, but the cost of moving money and the time it takes to move using banking rails is, with interest rates going up, is actually more of a challenge than not receiving yield on a stablecoin. So all of a sudden you've got an inverse view, in my opinion, which is actually the mechanism to move is digital assets and stablecoins, or crypto assets in particular. And all of a sudden that interest bearing, where I can put my money in a bank account or buy treasuries and get relatively risk-free assets, risk-free return, nothing's risk-free. All of a sudden that impetus has kind of gone away because people are realizing that if I can move that capital much more efficiently, I can put it to work much better and much faster, which again adds to the tailwinds around utilization of crypto, but more broadly utilization of stablecoins as a proxy for banking.
So Miriam, I think this completely sets the stage for you. I mean, we all get into, or at least I got into crypto and Bitcoin, and then you know, Ethereum's composability, and you can create financial applications, and DeFi comes. Stablecoins are the killer app today. And if you look, there's more than $1 trillion, I think it's like $1.6 trillion in transacted in stablecoins. Circle in USDC is a major player of that. It also plugs into a theme around tokenization of real world assets. They're backed by US Treasury bonds. It's effectively like a euro dollar. It's a tokenized digital dollar. It's enabling trade across the globe. Like, what you know, hot, cold, just right. Like, where are we at and where are we going?
I think it's just perfect. I think we're at the cusp of the next phase of growth, and I believe that it is going to be driven mainly by stablecoins like USDC, especially regulated stablecoins. I, like Tania, think that there are three key factors driving the appeal of stablecoins around the world, and I think the first one is the convergence of these three, which I believe is going to sort of be helping the next phase of growth. The first one is technology. We've seen a huge amount of development in this space, especially if you look at last year, given sort of all the challenges that we've faced. The industry has focused mainly on building, and the technology it's been doing very well. We've seen a lot of developments in this space, and I think the role of stablecoins play an important role there. The second one is regulation. I think regulation has been a key theme over the last 18 months. And we're seeing a lot of jurisdictions we moved from sort of talking about banning digital assets to really embracing, having clear frameworks around this. And what's interesting this year is that there are more talks about regulations for stablecoins specifically, and I think the UAE is leading the way, with VARA recently sort of issuing their guidelines, and with the central bank, I think, actively working on announcing sort of a new framework. The last one, the third element is obviously the adoption globally. And this is driven by the current macroeconomic environments that we're living in today. If you look at, if I just use the case of financial inclusion, for example, you have almost 2 billion people that are unbanked, right? They are unable to access the traditional financial system. But at the same time, 2/3 of them have access to mobiles and smartphones. So what stablecoins like USDC do in this case, and sort of some of the programmable wallets and Web3 solutions that we offer, is that it allows those who are unable to use the current system to be onboarded on the Web3 economy. And with that, we're seeing sort of a blockchain native economy that's being built that, in my opinion, in the next few years will make sure that everybody is joining that digital transformation. And this region, I think, is a very important part of this growth. If you look at the UAE, if you take the UAE and KSA as a market, we are living in the largest outbound remittance corridor in the world, which is serving some of the largest markets, including India, Philippines, etc. So I think stablecoins are an important part of this. Real-world asset is another interesting theme that we're seeing, especially within the banking sector, real estate, bonds, etc. So it's a very exciting time.
In this current environment, what a lot of people don't realize is about 70% of digital assets or crypto trades backed by stablecoins, not denominated in US dollars. Furthermore, if you look into DeFi, everything is denominated in stablecoins.
Correct.
So it's interesting. We just had, I guess it was like 6 months ago, Silicon Valley Bank. That was an interesting impact on stablecoins that kind of cascaded through the entire crypto system. And ironically, it was a bank failure that caused kind of ripples to go through the digital asset system. So digital assets is about transparency, it's about verifiability, it's about trust. And with stablecoins, there's algorithmic stablecoins, there's fiat-backed stablecoins, there's asset-backed stablecoins. How are you guys different, and how should people think about, because stablecoins are so critical to this space, like how are you guys different, and how does that impact the path forward? Where are things going to go awry, and where are you guys positioned well?
Well, there's a reason why USDC specifically is very much differentiated compared to the other stablecoins that you see in the market. Number one, we're regulations first and compliance first company. What does that mean is that we're fully transparent when it comes to sort of the processes that we apply when it comes to compliance. So we abide by the AML, KYC rules. We also have fully backed reserves, and the way it works with Circle is that it's the model is an 80-20 model, where 80% of the fiats received in exchange of USDC tokens are basically put into an SEC regulated fund, which is managed by BlackRock, who's our strategic partner, and is put in one of the largest banks in the world, right? The other 20% usually sits in the banking system. Unfortunately, the SVB case was a bit of a challenge, but we were okay at the end. The 20% is merely there basically to serve the redemption needed for our users and clients.
Thank you. Bill, can you talk a little bit about the global macro backdrop, sorry.
Yeah. So I think in past 5 decades, basically the best investment strategy is long only or long bias, because you will take advantage of 3 drivers of the global economy: industrialization, digitalization, and globalization. Yeah, but I think, and also in some certain interest rate low environment, especially in past 2 decades. But I think in past 48 months, everything changed. Digitalization has been pretty much mature, and the globalization is getting to deglobalization. And in such a sort of an uncertain global environment, we do think crypto is play a role as reform the traditional paradigm. Just like in 1970, equity, all those kind of risky asset class doesn't perform well, and a lot of investors get into the gold, etc. Something happened, in this age as well. So when we see, the investors how to, sort of cope with the global macro environment, we do see the long only or long buyer strategy will not, perform as well as past 2 decades, or how to take advantage of the alternative assets like crypto, etc., and also how to serve in some certain global macro environment like a dolphin. I think that one would be pretty important for next decades.
Okay, excellent. So I'm going to combine one of the other questions that we have on the agenda here. Regions, what's hot, cold, just right, and then combining that with regulatory posture. You have FCA that's come out just yesterday with a new announcement. You have MICA, you have VARA here, DIFSC. Around the world, Hong Kong is now open for business. As an entrepreneur, and I've never been interested in government and regulation, I find myself reading hundreds and hundreds of pages of regulatory documents, trying to understand people's posture on stablecoins, and is this a security, is this a derivative, etc. What are the regions that are hot, cold, just right, and what are the, is part of that consideration regulatory? We can go down the line here. Bill, back to you.
Okay. Yeah, I didn't see any region is too hot, because I think, unfortunately, the crypto founders, some of them, they didn't behave well in past 24 months. And behave unethically, to hijack and move and use users' money, etc. So I didn't see any region is hot, but I see several regions are pretty cold. I think China is, as always, cold. from the very beginning. The reason I moved to this region is because one day in 2021, when I was hosting the IC meeting, investment committee meeting, because I was the global head of M&A for Binance, and I was literally just taken by two cops out of my apartment in front of my wife, to the police station for investigation of the Binance. And 24 hours later, I just flew out of Beijing and moved to Dubai. Yeah, because here is a friendly environment for the crypto player. So literally, in China, crypto is criminal. It's not heavily regulated. It's criminal. Yeah, period. And I hope US will not be as harsh as China, because the US is still the leader of the global economy. It's better to manage and regulate the crypto in a proper way, because this is, of course, it's one of the very legit and valuable innovation to the global economy. Yeah, so I think China is cold, US is cold, and UAE region is is on the right position. Yeah, it's friendly, but also with a very sophisticated regulator. That's why all the global founders, if they want to find a place to stay and to carry on their business, they come here. Even for the global top 10 layer 1, Tom Foundation is here, Polygon is here. For exchange, there are quite a few exchanges as well. Yeah, and Russian founders, Asian founders, Indian founders. Yeah, this is the most diversified environment in the crypto domain.
Miriam, what's hot?
I might sound biased, but I think this region is the hottest. I think the combination of progressive regulations and policy, the attractiveness of the ecosystem to global founders, it was mentioned earlier, the ability to sort of live within a safe environment that provides sort of a great lifestyle for the different sort of nationality. We have over 200 nationalities here in the UAE, and also the UAE being sort of a model for the rest of the region. I'm very excited about what the potential of what we're likely to see from a regulatory standpoint. I think we've seen ADGM really leading the way for a few years now in terms of really putting together a very progressive, a very well put together sort of regulatory framework for the digital assets, and they have not stopped there. They are trying to build around the Defi, as well as stablecoins. We're seeing, as I mentioned, UAE's central bank, as well as VARA, being extremely progressive. If you think about it, VARA has been set up very, very recently, and the amount of work they've managed to achieve so far has been absolutely fantastic. The other element I think linked to this is the addressable market, especially maybe I can refer specifically to stablecoins and some of the use cases that we're seeing here, specifically linked to financial inclusion. If we look at the size of the market, the need for the dollar, the inability to access the traditional financial services, as well as the potential for people to use stablecoins as a hedge against inflation, as well as a store of value, I think it's a very exciting region. And of course, Asia is probably the second one I would think would be very interesting as a market.
How about Hong Kong or Singapore?
Yeah, so I think I'll echo what Bill said really in terms of what's cold, right? I mean, and Tania can probably talk more about it, but the US has kind of shot itself in the foot over the course of the last couple of years. Asia, for me, had stolen a march quite a while back. Japan was the first market in the world to really regulate crypto. Hong Kong has leveraged in many ways and led the way with respect to applying existing frameworks or extending existing frameworks to incorporate crypto assets. So the SFC in Hong Kong extended their purview to crypto assets. Singapore went a slightly different route and went down a Payment Services Act. So went down a kind of digital payment token, the movement of value. I don't think either of them are wrong, but both of them have taken slightly different views. You're absolutely spot on. The FCA, who we work very closely with, recently yesterday announced the publication of the consultation. I haven't had a chance to read it because I've been here.
Good.
And MiCA across Europe will come into law in early 2026, but will be read in next year for implementation and adoption by 27 states across Europe. Now, I'm not going to talk necessarily eloquently about the UAE. Miriam did that much more than me. The thing I'd say, and not to rain on the parade here, The clarity around which regulatory framework, so ADGM, VARA, DIFC, WTC, there's lots of acronyms. From someone outside of the region, working out what works best and how to land, what the right frameworks are, who to work with, can be a little challenging. So if anything, for the UAE to be hotter, consistent framework, consistent approach, but it's incredibly entrepreneurial and quite refreshing to be here because of the amount of the welcome that we get as businesses looking to set up in the region.
Excellent.
So I'll just be very brief, aware of time. First of all, I just want you to know that the title of this panel was not something we came up with a week ago. This was 6 months ago. So while I was in the US in another panel that said, is everything frozen for crypto? I was invited to speak at this panel, which was talking about the Goldilocks moment for crypto even before this last rally we had. So that tells you a lot. Look, it's no news to everyone that the US has been very, very negative on the regulatory front for the crypto asset class. But when you have a very powerful technology that is not going away, the regulators eventually will have to make peace with it because it's going to stay with us. And that is what we already see happening in the US. We have had bipartisan agreement of groups in Congress pushing for pro-crypto legislation. I think that's going to continue. I think the reason we saw such bad environment in the US was just a fallout from the SBF donations to both political parties. And so we've seen what we've seen this year, but things are changing. The technology is not going away, and eventually the environment in the US is going to turn around. In the meantime, of course, the rest of the world is going to plow ahead, and that's going to give a signal to the US that they can't stay behind. So.
Nothing more to say. I'm not a legal advisor or a lawyer, so I think you guys have done a great job on that. But I do want to share one last thing that's actionable. And we're talking about what's hot or not. And Raha asked me this really good question. She said, can you throw some predictions? And I can tell you right now, this is the fourth major, we've already had 4 bull runs. This is going to be the 5th major bull run that's coming up. And my prediction for Bitcoin, just for Raha, is going to be the 90 to 95K mark, simply because I see Bitcoin doing between 5 to 7 times from its all-time low, previous all-time low. And I also think if you guys have more risk appetite, with regards to the layer 0, 1, 2 blockchains, which we talked about proof of stake earlier, there's anywhere between an 8 to 12x to be done. We got to understand, guys, that this entire industry is worth less than a single company's market capitalization, which is Apple. So it's absolutely tiny. So if Bitcoin hits the $2 to $3 trillion market cap, it will be around the 90 to 100K market cap. Price tag, sorry. And one thing that I really want to share as well that's very important in these cycles, right? For the 5th cycle is we need a bubble. Like we really need to create a bubble. And Mike Novogratz said that yesterday that, every time we have these bull runs, you need some sort of a 12 to 18 month bubble. Previously it was DeFi and NFTs. And I think something that needs to be hugely democratized other than finance is information. And I see social fi being the next big thing. In an area where independent journalism, where information is shared by citizen journalism, unbiased, unsponsored, not funded, and people sharing their real stories, being able to share that freely to challenge some of the major media outlets that are owned by 5 to 6 companies across an entire country. And that's a key point here. And the way that will work in terms of the future of information is we need ZK KYC. So zero knowledge. We need to be anonymous on chain so that we can actually feel free to express what we want to do. We need a wallet to counter all the bots. Who here is worried about fake, deep fake, or having fake hues or fake voices, or who has been scammed or knows someone has been scammed before? Please show me your hands. The bots are one of the most worrisome problems in the future. So identity is a massive, massive key. And if you combine zero knowledge identity with a Web3 wallet, with decentralized storage, and then you add a credibility score on chain. So the gentleman here, if we're interacting, you don't need to know who I am. KYC will tell you who I am, but you need to know if you can trust me. And we can transact on a peer-to-peer level. We can get the right information. We can democratize information, which I think is one of the biggest use cases for blockchain and on-chain technology in general.
Okay, thank you, Alex. So Raha asked us earlier to call out two things. One is price of Bitcoin in 1 year from now. I'm not a big fan of that personally, but not investment advice. But I think we do that. The second thing is, in 10 years, what percent of financial services, thinking about reaching the unbanked, enabling financial inclusion, et cetera, what percentage of financial services actually runs on blockchain and decentralized networks? So price of Bitcoin, what percentage of financial services in 10 years runs on decentralized networks? Tania?
I can't give you a particular price, but I'm gonna say that we're tiny percent of the gold market cap. So we're gonna if you think we're gonna get 20%, 30% of that, we're multiples from here. The percent, look, I think eventually most of the financial transactions, I don't know, 10 years from now, 20 years from now, may run on blockchains. I don't know what the next 5 years will bring, but certainly this is going higher. The technology is just superior, and this industry is just going to grow.
Cool. Usman?
I'm going to steal Jeff Kendrick, who runs research at Standard Chartered for digital assets. His price prediction was 100,000 by end of next year. I'm stealing that from him. It's kind of stealing Alex's as well. So I'll put that out there. Unfortunately, I think 10 years is too short a horizon for blockchain technology to really transform financial services unless there's another major regulatory imperative. If we had the financial crisis again today, we would be using blockchain already. So for me, 10 years to transform financial services is too short. So I'm going to say somewhere in the ballpark of 30 to 40% of financial services will be using decentralized technology.
That's a good number. I like it. Miriam?
I would say 100, 150, around that for Bitcoin next year. I would disagree with Usman. I'm more optimistic that in 10 years we'll have at least 80%, I think.
How much?
80%.
80%.
So I'm very optimistic. I believe regulation will be put in place in time. There might be a catalyst that will make that happen. I guess COVID sort of changed things, so I expect maybe something else to...
Step function disruption.
Yeah.
I like it. Bill?
Yeah, so for the price, I see 100K, to match the Apple stock market cap. And for the financial inclusion, so I also think, it's going to be like 80%, 90%. If we take one step of the analogy, take one step back of the digitalization of the finance, basically that's a fiat, from paper fiat to, sort of the digitalization. Different regions, they have different, the payment digitalization penetrate rate, but the highest would be probably Asia. In Hong Kong, even homeless, they should have a QR code because, the people who want to help the homeless, they have to pay by QR code. There's no cash at all, yeah. Especially in Shanghai or Shenzhen in mainland China, yeah. So this journey takes 1 decade from paper fiat transaction to digitalization. And now we are talking about, the blockchainization or, tokenization. So as long as, this use case can create a value, and in the end of the day, there's no reason, it cannot be 80% or 90%.
Excellent. And I think the 150 to, who knows, 500 on the high side. And then in the next 10 years, I'm like the 10 to 20% of global financial services. If you think about tokenization of real world assets, private bridging to public blockchains, I think this is digital transformation for financial services and financial inclusion. Every person on the planet with the internet and cell phone will have digital assets. It's really the incumbents that are the biggest impediments right now. So thank you very much, everybody. It was an amazing panel. I enjoyed each and every one of you. So thank you.